Good day, guys. Welcome back to LPT's classroom. And today we'll be discussing how to select the right institutional POI. I'm very sure that most of you will be very, very happy because of this topic. This is always the problem most traders actually face. And I can tell you for free that if you understand how to select the right POI, 50% of your problem is already solved. Then, when you now learn how to pick a better entry, then 70% of your problem is already solved. Now, I'm not going to waste much of our time because we are just going to start immediately. And before I start, I would like for those who are just seeing this video for the first time, kindly help me to subscribe and also do not forget to like the video so it can get to more audience. So let's get to business. Selecting the right institutional POI. How do I know that this is the right institutional POI? Because most of you, once you learn a particular concept, all you do is you just go to the screen or to the chart, and maybe you've learned another block or fair value gap or anything. Or when you get to the chart, all you just do is just select the other block. This is where I'm expecting market to get to, before you enter your trade. Trading is not like that. Did you understand? It is not that easy, right? If it's that easy, most people will be profitable. If you can just learn a concept from someone, and immediately you get to your chart, you pick the concept and you start marking, area, marking many things and expecting markets to start playing out or start making money. It's not that easy, right? But I'm going to help you with something today, which you can decide to make it your own personal model and you work more on it. So, and another thing I want you to understand is me, and I will really, really help you guys a lot in this channel because the kind of mentality I have in trading is quite different, and the way I think is totally different from what the majority of traders are doing. And you can actually confirm this from a student. So, and you see, I'm someone that when you teach me something or when you give me something, I would be interested to know the source of what you are giving me. I'm not someone you can just come and give a theory that this is how this is and I'll just take it like that. No. I'm someone that if you are giving me anything, I would like to understand the source. Why is it like this? Why are people doing it like this? Do you understand? I don't want to be cramming anything, right? If you want to teach me something, teach me the source so that I will know that once I get it for life. Not that you will teach me something that this is what you should do. That is why I don't like indicators, right? The indicators, they will tell you that once MACD kini kan cross another MACD, then it's a buy. Why is it a buy? Do you understand? And then at the end of the day, we now realize that the reason why it's a buy is as a result of the candlesticks formation, the price action. So it means that if you can actually study the price action on its own, those candlesticks, definitely you can even predict when that MACD or when that indicator will cross. You understand it? So I always like to understand the source, not that you just tell me this is it and I'll take it. So majority of you guys always get it wrong when you learn a concept or you learn new stores from the market, right? Somebody tell you that order block is the last candle before an impulsive move. Look at this now. Like they'll tell you that order block, a bullish order block is the last sell candle before this buy, right? And a bearish order block is what? Is the last buy candle before this sell. Fine. But one thing I want you to understand is there is what we call under block and there's what we call institutional candle, right? So I like to understand why or when other block will work from when other block will not. Or let's say when the chances that the other block will work is higher is what I'm interested in. And that will take us to institutional candles and institutional footprints. So basically, we all know that when we talk about institution, we're talking about the big boys. Or don't let me even use boys for them, the big men in the market. They are people who actually push price and allow market to move. And their signature are always impulses and the size of the candles, right? Whether news or no news or whatever, their signature is always the big move in the market, just like we call them the big men. So they initiate the big move. So one thing I want you to understand first is that when you are talking about be how to go along with the word with the institution, because that's the main reason why smart SMC exists, right? So it means that you want to trade along with the big pocket, with the big men, with the institution. And first question to ask yourself, where would you actually find these institutions? Where would you find them on the chart? Level of liquidity, right? Because they are the one responsible for the big move, for the manipulation. So you always find them in an area of liquidity. And that is why before you see an impulsive move to the upside, you always see that there would be a manipulation or liquidity gap. Do you understand this? So liquidity gap, for those who actually don't understand what liquidity gap is and liquidity run, let me quickly first break that down. When you say a liquidity gap is when you are looking for a sell, right? And you are expecting market to take a liquidity above a high. Do you understand what I'm saying now? Like this. This is what a liquidity gap. It's a simple English. So you are expecting a liquidity to be taken to the upside just to continue the move. Do you understand? So it is like a fuel. Liquidity is like fuel. So you need to take money to push price. So this is liquidity grab. So when you talk about liquidity run is for continuation. So this is why majority of the people get it wrong. And I don't know if there will be enough time to explain more on this, but don't worry, I'll always clear all of these things. So liquidity run is a continuation. That is a run on liquidity. It's more or less like is running away. Do you understand it? A run on liquidity is more or less like a break of structure to the upside, because we always say that once the market break a high, do you understand? Once any market breaks a high, then it is a buy. Then when the market breaks below a swing low, it's a sell. But what about this? Would you consider this a buy too? So that is why there has to be difference between a stop hunt, liquidity grab, and what and liquidity run. Liquidity run is used as BMS and a continuation. That is, you don't need to care about the high that was taken. Just relax, let the high be taken, and keep looking for what a continuation. While liquidity grab is a liquidity you are waiting for market to take so that market can continue moving on its own. So, and who are the people responsible for this liquidity? They are the what? They are the big boys, the big men, the institutions. They are the one responsible. So if you know that the institutions are responsible for liquidity, then you should know that the time to get in a better POI is always maybe when you anticipate the institutions to seek liquidity above a high or a low, and then they give you a signature that they are already moving in their own direction, right? So when the markets seek liquidity above this high, I want you to pay attention. When markets seek liquidity above this high, there are a lot of information from this particular swing to this high. But the most important one that you pay attention to right now is from this particular place to this high. You need the information in this area. I'm teaching you how to always select a better POI, right? So pay attention. So you need to pay attention to this particular place because you need an information in this range. And what is the information? The information is the candle that actually grab the liquidity is what you are looking for. Do you understand? You might have candles, like you might have like four candles. You have one candle and you have another candle. Sorry. And market keeps buying and you have another candle. Do you understand? But the candle we are interested in right now is the one that actually grabbed the liquidity before the market start what? Dropping. Before the market start what? Dropping. So if you can identify that candle, then you can now use your idea of order block, because that is why some people will say order block is not complete because the explanation is not complete. So when you have another block, that is why sometimes you will have another block like this. You have another block like this. You will now expect market to return back to this other block to sell. But guess what will market do? Market will come here and continue selling. Market will come and continue selling. And guess what happened? You personally will then now say that this particular order block, you are still expecting it to be obeyed. That is, when market get back to that order block, you're expecting it to sell. And at the end of the day, market will blast that order block. Do you know what happened here? Wrong information. Trading based on theory. Do you understand? The reason why this will happen is because this other block might be there, but the candle that actually seek that liquidity might be this candle, right? It might be that candle. The other block might almost want to seek the liquidity, but did not. But you see this candle, that candle was the one that actually seek liquidity above the eyes we are talking about. Let me bring it here to make things easy. This is the candle. This is your other block. Let's say this is your other block around here, and this is this candle around here. So, so this candle was responsible for the liquidity grab. Do you understand? So, if you are considering any POI around this place, you should pick this from this particular low to this particular high. In this way, you are not just picking a POI based on theory or based on what you were told. Do you understand it? What you learned was when you have the last the last candle before the market starts selling is the order block. Sometimes it happens like that it is that last candle that we actually seek liquidity before market start dropping. But if it is not like that, whereby the order block was there, then another candle was responsible for that liquidity, then dropped again. So if you want to consider an order block or you want to consider a POI, you are doing what? You are marking the whole candle together, which is the most importantly, the candle that actually seek liquidity. And that is what we call the institutional candle, right? That candle is what they call the institutional candle. This particular candle is the institutional candle. So you don't just neglect the candle because you are trying to select an order block. It's more or less, you get what I'm trying to say. The reason why you're selecting this institutional candle now, you understand that the people who have power to seek liquidity and people who actually push this market are the institution. And the number one place you can think of them are area of liquidity. Do you understand it? So when you see an area of liquidity and liquidity was taken, the next thing is how, which candle took that liquidity? Which candle was responsible? What happened in that range? Do you understand? In that range of liquidity before the market start moving, what happened there? Then once you are able to figure out that this is the candle that was used to seek liquidity, then this is their what? Their footprint. So in some cases, it can happen that it will be that other block that will seek the liquidity based on the fact that it is the other block that is the last bullish candle before the next candle started selling. But in this case, the other block was last bullish candle, but what did not take liquidity. That other block did not what? Did not finish its job. So this is the candle that actually what? That finished that job. That is why you will then mark an order block. A market will just tap in inside that institutional candle and market will sell. I don't know what other people define institutional candle as. Do you understand? But this is what I call my institutional candle. And this is how to select a POI. So you will not pick another block when market have already mitigated the institutional order block. Then you will now mark inducement. It will fail. Do you understand it? Market have already mitigate the institutional candle, right? Market has already returned back to that institutional candle. You are now marking this high as your own inducement for market to do what? For market to enter the order block that you put. My brother, market will enter the order block and violate it. Once you know this, then you know how to avoid some other blocks. Do you understand? Institutional candle has been mitigated. There are others there has been mitigated. So this other block, that is why some people when they are explaining how to actually select the right order block, you know what they tell you? They tell you other block that have not been respected. Go to the chart, you will see other blocks that have not been respected, the market will violate it. Maybe because market has mitigated the institutional candle, the one that did the job. Market has mitigated it immediately and market has dropped. Now you are using the real, imagine using the real leg, calling the real leg an inducement. Do you understand? That is why sometimes you will mark an inducement and at the end of the day, market will blast it. Somebody will tell you any other block that has not been respected before is high probability other block is a lie. Do you understand it? It will only be high probability other block if that other block was the candle that seek liquidity. If it's not, that the other candle that engulfed that candle was actually the one that seek liquidity and market has mitigated that particular candle. This other block that you are saying market has not reached there before it is just a candle, just like every other candles in the chart, and market will blast through it. Go back to your chart and back test and come and tell me the results. Do you understand? So when you understand that, you will know that nobody will just come and give you a theory that the last buy candle before the kini come is, if that last candle did not do its job by seeking liquidity, that candle is just there. Do you understand it? But if that last candle was responsible for the liquidity grab, then the next candle was now showing sponsorship to the downside, you can mark it. That is a clean order block. But if not, this particular one that seek liquidity, that grab this particular candle, is the one to mark and not this one. At the end of the day, market will mitigate this and run while your limit is just there. So that is number one. This thing I'm giving you, hey, I hope you value it. So I'll go to the chart and this is number one POI. Do you understand? This is number one POI that I can teach you, and I can tell you that if you go to your chart and you apply this logic to your trading, and you apply this logic to your trading with proper risk management, you will definitely make a lot of money, because the other block you are choosing now has logic, not because somebody say. You've seen it yourself that institutions are responsible for liquidity grab. Their signature are big move. Then you study when the liquidity was taken, what happened, which candle was responsible. That candle, was it another block? Was it an engulfing candle? Then you do what, you select it and you wait for the mitigation immediately. That's all. Very simple. It's different from somebody just tell you the last candle before the another candle is why. Nobody gives me theory that doesn't have more details, and I will take it. Do you understand it? That is why I say your intelligence is always important. You need to apply it in everything. So let's check few examples of what I explained, and you can learn and you can have your time, because I'm very sure most of you are ready to go back to the chart and start back testing, right? So let's start from where. Let's see. Look at what I'm saying now. Look at what I'm saying. If you look at this particular level, this is the level of liquidity. And what happened here? Liquidity grab. You know, I explained liquidity grab from liquidity one. So obviously, this is a liquidity grab. And where is the candle that actually seek that liquidity? Was this other block? Is it this other block or the next candle? Looking at this, obviously, is what is the other block. So when you pick the low of that other block, is an area. I don't want to know if market is coming to mitigate it immediately, but this is a nice POI to take. And let's check if market ever got there. This, let me paint it red so that we know. I just want to be sure, right? Let's just see if market get there later. The red candle. What is this? What is this? Okay, now listen. Let me clear this place. So I think because I'm saying something already and I just want to quickly clear it. This is it. You can see how markets dropped. But then if you look at this level now, let's check what we have in this level. This is an area of liquidity, right? Plus this particular high with this particular high and this particular high are level of what? Liquidity. And where is the block that actually seek that liquidity? Was it this candle? No. Was it this candle? Yes. Now mark that candle high low and mark that candle high. And let me tell you, that candle is your POI. That candle is your POI. And you add what? You add a BMS here immediately. Whether you use this as your BMS or you use this as your BMS, then what happen? Market return back, pass through the fair value gap, and tap inside that block, inside this candle, right? And that was what? What was your trade? This is your trade. Do you see that? You can imagine how we just projected this and how I made this without planning for it, right? You can see that now. This is actually a liquidity graph. Where is the candle responsible? Look at the candle. This green candle was responsible for this liquidity because this shows that market wants to continue and they use this particular candle to blast through it. So you are marking this particular candle together with this. That big candle is institutional candle. And look at it. Enter inside because this was the first drop. So if you are expecting a retracement, it's back here. And you have the fair value gap here. And you have it. Market enter, and that is one. That is how to mark POI. Let's check another example. If hopefully we can have more. Let's check another example. I have showed the one that, okay, look at this one too now. This one too now. This particular eye. It was actually this particular candle that actually seek liquidity. So, which is actually the institutional candle. And if you are to mark POI, you are marking from this eye, this low, this guy, and you see how market tap inside. So if there's anyone expecting market, maybe you are now using that one as inducement, you're expecting market to come back to a supply zone or whatever here. You see, it will fail. It will fail. But if you have marked your candle, this, forget whether it's another block or not. This is the candle. Just mark it fully. Or where will you say this market sells from now? Where? If it's not this last candle. Do you understand? So this is your POI. This is another example. Now, let's check one more. Let's check one more. Okay, I think we've seen this. Let's check one more. Let's go to recent charts. I don't want to remove all the drawing so that so I'm trying to check And I'm trying to check the one that has another block, but the other block is not the candle that seek liquidity. Do you understand it? So you can get what I'm trying to explain better. So this is the last example, and I think we call it a day from here. I will continue from where we stopped in the other videos. Where is it? Okay. Now, if you look at this particular low, we had what? We had yeah, we have equal low, right? And we had the what? A liquidity gap. If I can ask you, which of this candle grab this liquidity? Is it the other block or the candle after the other block? Obviously, it's the candle after the other block, which means if you are thinking of any POI here, it should be this particular other block. I mean, this particular candle. And that is where you have your own trade. And you see, now, imagine, imagine this, imagine you neglecting the fact that this was the candle that was responsible for this liquidity sweep, and you now what? And you now pick your other block and you mark this particular low as inducement, which is the main swing, right? And you mark it as inducement, expecting the market to actually come and mitigate to this particular order block. Why this point is already turned to what low resistance liquidity run, which means that when market is coming back to this low, market is going to take it. I'm still going to talk more on types of liquidity, right? And how to identify high resistance from low resistance liquidity run. But right now, let's now draw this particular level. I can't draw it because I don't know where the market even. Okay, let's put a line on the other block just slightly below this one, and look at what happened. Look at what happened. Market will disgrace you here. Your particular other block totally what got violated, just like that, just by not understanding the concept of institutional footprints and identifying the right candle to actually use as liquidity. So in this particular place now, this your bullish order block is just a candle like other candlesticks here, nothing special. The only special candle here is the candle that actually grab that liquidity, which this is the candle, and this is your normal trade. So if you mark this main, you miss this main move, you miss this main expansion, and you are marking it as inducement, you are doing yourself. Did you understand? So with these few stuff I've explained to you, I just want you guys to go back to your chat and what? After your back testing, you will send me two things. Is either you swear for me, or you do what? Or you pray for me. Go back. I will see you in the next video. I'm going to explain a lot, but just make sure you subscribe and share the video to your loved ones. See you guys in the next video. I remain LPT, and you can follow me in all my social media platforms. I am LPT_Forex on Instagram. I am LPT_Forex on TikTok. I am LPT_Forex on Twitter. See you guys in the next video.